Financial Argument. Follow us on YouTube.
I have an important interview today. We just had Andy Hoffman of Miles Franklin on the show a few weeks ago to discuss the cryptocurrencies, specifically Bitcoin, and it's this alliance with gold. And since that time, though, we've had an additional Fed hike. As I interview him today, the Dow's at all-time high, everything's rallying. But we know that the reality is that the underpinnings of the entire financial system are coming apart, and they're simply held up by the perception that somehow all of this fraud and all this manipulation and intervention by central planners is normal. So I wanted to have him on the show because I think now is a great time to buy some physical gold and silver. And I think no one can explain the economic situation better than Andy Hoffman. Andy, thank you for joining us today.
Oh, yes, and thanks for having me as usual. Look, put it this way, I wrote an article maybe 2 weeks ago called Historic Market Manipulation, Setting the Stage for Catastrophe. And, when you talk about the only thing that's keeping things going is the perception that the manipulation is creating, it's like, it's not even that anyone is even in the financial markets. It's not like that they're looking at the markets and going, oh, the Dow is up, it's okay. It's really just a matter of the markets being up are the only thing keeping the whole system from falling apart at all, because there's corporate profits are falling apart, currencies are falling apart. All that's left is the wealth effect created by central bank manipulation. And it's gotten to the point where it's almost a joke now when you read about how all of the performance of the S&P 500 is based on 5 companies. And then you see that the Swiss National Bank, their 5 biggest holdings are those 5 companies. And you have, it was 2 years ago when the Japanese said that they owned more than a third of all the stock ETFs, and they've kept going. Do they own a half now? Do they own 2/3 of all the stocks ETFs in Japan? So it's getting to the point where this is unequivocally the worst economic activity of our lifetimes across the board, the most debt, and it's only going to get worse. And as I wrote this morning, I wrote the most PIMB, or precious metal bullish, everything else bearish transaction in history. I mean, Friday's Amazon.com and Whole Foods merger has such dire ramifications for all of this, for the debt edifice, for the Fed hiking rates and claiming that the economy is getting better, because we are going to have massive debt defaults and bankruptcies, and all as a result just of this one transaction. So I know that's a lot to say at once, but again, as you said before, we're talking about the most undervalued precious metals and overvalued financial assets in history.
Let's go back to just expand on Whole Foods. You said there could be massive layoffs from this transaction. Why?
I've been talking for some time now. I think we all sense it, but I've really, really been talking. I said today, it goes all the way back to a decade ago, and I said, gee, it looks like everything is made in China. Really weird. And here we are, a decade later, and basically all these memes of our world, our life, are changing. The way that we interact with other people, the entertainment forms that we choose are changing. And of course, the technology is making to the point, for instance, I don't use a paper and pen anymore. So there goes the whole Staples and Office Depot. That's just one example of the things that are changing. And, it's a combination of demographics, financial issues, and of course, technology, which is sweeping over the world and causing massive changes in the norms. Which is fine when you have technological process, when you have a healthy economy, but not when you have an all-time record level of unemployment and debt and insolvent governments that are going to require money to pay for entitlements, and record low interest rates that have to be maintained across the world, and record low purchasing power that's only going to be diluted further if they try to do anything to pay for all these things. And in the case of Amazon Whole Foods, it's just a perfect example of how technology is going to dramatically change the world. Because look, Amazon, everyone knows that Amazon, they think of Amazon, well, yeah, they destroyed Barnes and Noble with the online stuff because you could buy books. But people aren't really watching the fact that these kind of technologies are enabling the reduction of thousands and thousands of jobs. I did an audio blog a few months ago, a shocking new world order, and I'm referring to the fact that it's possible that half of all the jobs will be gone in the world over the next 20 to 30 years. because of these things, which again is fine if the people have money and the governments have money to get through this transition. But people don't have money and they have historic debts. So when you talk about all the retailers that are going to go out of business as a result of this, all the jobs that are going to be lost, all the debts that are going to be defaulted on, in the process of this greater good of making the business more efficient. And then you think about the fact that central banks are already printing more money than they've ever printed before, and you realize that, at some point the rubber has to hit the road, and this is a perfect example of how that's being accelerated.
Yeah, and just like the bigger banks that failed were able to get bailed out and propped up by the government and, of course, advanced to become even bigger, I look at this Amazon transaction, and though it may be convenience with the technology, the fact is this is a bloated company from all this funny money that's coming into the system and this propping up of the Dow Jones and the S&P 500. And of course, instead of Whole Foods either becoming a bigger business itself or merging with another company, Amazon just eats the damn thing because it's so bloated in its market capitalization. Andy, I wanted to turn the conversation to these Putin interviews with Oliver Stone. Did you get a chance to watch all 4 of them?
No, I just wanted to add, though, with the Amazon, a big reason why it was, the 2 big reasons that it was pushed forward maybe faster than it would have is, one, because of, as you say, the bloated market that allows companies like Amazon to just take over whatever they want. And the other part, of course, is things like these crazy government regulations that have pushed the minimum wage up to such high levels that it's forcing companies to these solutions, even if it's, not organic. It's something that they feel they have to do to survive. And again, there's so many ramifications, unintended consequences of trying to prop up, what I call history's largest, most destructive fiat Ponzi scheme with printed money and market manipulation. This is a perfect example of it, because as great as it is for the long-term outlook for business, it's that bad for the short-term outlook of what's going to happen to the current state of business and all the people and companies that are involved in it.
Yes.
Yeah.
Certainly a major transition. And this morning or last night, the U.S. shot down a Syria plane. This morning, Russia said any object that's flying over Syrian airspace will be shot down. You read more of this than anybody that I know, and you know the players and you know the oil market well, because that's what you used to do on Wall Street. Are we looking at a potential World War III outbreak here?
Well, again, that's not really my forte, is the political part. I mean, I certainly mentioned it in terms of what it should mean to the markets, particularly precious metal markets. And we're talking about heightened escalations of, military aggression around the world, from North Korea to Syria. We now want to send troops to Afghanistan, 20,000 more troops. I mean, you can't make this stuff up. And but that's just part of it. The bigger issue, though, from an economic standpoint, is the oil. And again, unintended ramifications of the propping up of the oil market. It's no different than what they did in precious metals. By holding the price down for so long, they've destroyed the mining industry to the point that we have, we're going to have terminal collapses in production that already started, and demand is at or near all-time highs. Most currencies, despite what the cartel does, gold is near its all-time high, or in some cases above it. And of course, the inventories have been depleted in the goal of keeping the price down. I mean, you can look at what the COMEX inventories are. They're down like 70, 80%. And that's just one instance of it. So, but on the opposite side of it, I wrote this article 2 or 3 years ago called The Direst Prediction of All. And I kind of based it on David Stockman's Great Deformation, of basically saying, look, decades of propping up the system with money printing and the financial engineering and the predatory lending and the manipulation of markets have created the biggest oversupply in history of just about everything. One of them being retail stores, particularly in America. Another being a lot of the commodity businesses. And, you really just hear about oil because it's a big financial market, but people don't realize that, like, the CRB commodity index is breaking below 2-year support levels right now. And we're down 30 or 40% in the last 3 or 4 years. Agricultural business is falling apart. All the debt is the delinquencies in that one sector alone. But oil is the biggie. And again, I worked 10 years in the oil industry as a sell-side analyst, so I know it very well. And I've talked about it forever, how the OPEC production cut would fail, and that probably OPEC itself would fail with it. And it's the largest revenue-producing industry in the entire world. There's more debt that's attached to it. There's more junk debt. There's more political regimes and sovereign nations' treasuries that are tied to its fortunes. And that's why I've been saying all along that the oversupply, this is the biggest glut in history of energy, and it's only going to get worse. It's never going to get better, because even if it starts to improve a bit, we're going to have alternative energies that are going to start to replace it. And I said that this was going to happen. It's exactly what's happening right now. The OPEC deal failed. Now OPEC, we didn't even talk about Qatar. I mean, OPEC, there's this big split right in the middle of OPEC, potentially a military split. You have Iran and Saudi Arabia are now at each other's throats. And more importantly, the glut continues. And this is right after they extended the cuts. And I think what you're going to see is you're going to see a continued plunge in energy prices as a result. And you're going to see more war, or I should say the makings of war. You're certainly going to see the migrant crisis into Europe get 1,000 times worse as people flee the Middle East and the wars and the poverty that's going to ensue. And so, again, all this is the ramifications of trying to prop up the oil industry, just like the ramifications are going to be equally dire of trying to suppress the precious metal industry.
Andy, these Fed hikes, they're like it's nothing. These quarter basis points. What were your thoughts last week on Yellen's comments? And what is the point? Everybody knows they're not going to really raise them over, let's say, 1.5–2%. Are they raising them just to cut them because all other emergency measures are in place? Is this something that they're doing against Trump? Does this have nothing to do with Trump? Is this just to add to the perception that there actually is a recovery when in reality they know there isn't?
Well, there's so many answers to this question. And I think all of the above and then some would be the answer. Look, let's face it. The concept of raising rates or doing anything that's tightening is so unbelievably idiotic at this point. Because first of all, yeah, they've raised rates 3 times or 4 times. They're at 1% right now. But has anyone noticed that each time they raise rates, the economy gets worse? Even that little quarter point. I mean, the savers, we don't get it. We don't get a higher bank account rate. But those little increases have added up to significant increases to the borrowing costs of an already over-indebted world. I mean, the highest debt ever. And that includes the federal government itself. So all they're doing is making things worse. And right now, there's literally not a single other government in the world, a central bank, that's doing anything tightening. We as we speak, have the highest amount of cumulative overt, and I do mean overt. I'm not talking about all the covert stuff that the Fed and everyone else is doing. The highest level of overt QE in history. It's about $200 billion a month as we speak. And of course, the average interest rate of the major central banks is somewhere around, I don't know, 0.5% right now. And so they're only doing it because, well, one is, I don't know, saving face. More importantly, because they've been able with the PPT to hold the stock market up, they think we can force these through. I mean, can you imagine the stock market soaring today? Why is it soaring? I mean, there's absolutely nothing good going on. I mean, the state of Illinois this weekend is about to go bankrupt. This is good news. I don't seem to understand. They just think if we can goose the market, we've cornered the market on goosing markets, and we can force through some rate hikes. And yeah, if we have to lower them, we have something to work with. Although, let's face it, if they have to start a recession with a 1% interest rate and a $4.5 trillion balance sheet, I mean, what's the point? Because it's not going to work. And more importantly, the whole, you look at what people are expecting. Interest rates, since they announced that this hawkish rate hike and that they may do a balance normalization, haven't gone up one bit. They are literally, I'm looking today, they are sitting maybe 1 basis point from the lows of the morning of the rate hike when retail sales plummeted and wholesale inventories and the CPI. All the derivative markets right now are betting against the Fed. They're betting on lower rates and no rate hikes, or maybe one rate hike in December. So the point is, no one is believing this, and they shouldn't believe it, because all it's going to do is make the economy worse and make the Fed eventually have to have their own ding dong, the Fed is dead moment, when they have to admit. I mean, I was so shocked that they didn't do it yesterday or Wednesday, because they probably figured we could push the markets up even higher with our derivatives. But it's going to fail at some point this year, because the economy, I guarantee everyone listening, is going to be far worse by September and December than it is now.
Okay, that brings up a great point, because every time I get paid, I call up Miles Franklin, or actually usually text Andy Schectman, and I buy some gold or I buy some silver. Going into an official, even though we know that structurally the economy is without a doubt in a depression, maybe we'll go into a technical mainstream recession. Looking at gold and silver right now, what are you talking to people who are either new investors or somebody who's bought gold, but maybe they've taken a break for a while because perhaps they've been putting money into the Dow Jones?
Well, you know what? In here, it's so different. It's a tale of two hemispheres because here in the West, demand has been very low. I mean, you see it in the mint sales numbers, and really, it's the small retail demand is pretty much dead. I mean, it died. But that said, it's interesting. We are having some of the bigger type of investors buying because they're starting to understand that these levels, that A, there's value, and B, that this is probably the right time to start insuring yourselves, if not for the first time, to add on. So we're seeing that, and of course, in the rest of the world, in the East, where you've seen currencies decimated and all these geopolitical issues going on, demand has been huge. I think the early numbers for the first half of the year have shown worldwide gold and silver demand have been close to as high as they've ever been. So I think in the United States, people are a little more distracted because our PPTs have held markets up a little more better than in other places. But I think it's only inevitable that there's going to be some loss of control somewhere, and that demand will come back. And it may just be a rebalancing of the market because of the falling supply. I mean, it's remarkable to believe that where oil and all these other commodities, there's endless supply out there, whereas gold, the projection of the mainstream is exactly what I predicted years ago. They're now saying that gold production will fall 20% worldwide over the next 5 or 10 years, and it's already started. And silver, it's harder to get an exact number because most of it is secondary production, but their production peaked there too, and it's the same kind of issues. So supply is down, and it's going to go down a lot, and the money printing isn't going to change any, no matter what the Fed says and does.
Yeah, I think an incredible story for people. If you want to just completely ignore everything that's going on financially, just looking at the collapse of the discoveries in gold, all the billions that have to go into it, and they get far less and less return. And then you look at the future supply line, and a lot of these companies, like just the silver companies, are the easiest ones to pick out here, but all these silver companies, think about the biggest silver company or one of the biggest, Pan American Silver. This thing could just as easily be called base metal silver because 50% roughly of its revenues actually come from base metals. It's not even a silver producer as far as revenues are concerned. Andy, that is one thing I think a lot of people...
And you know what, Daniel? I remember, I've been at Miles Franklin now, it's almost 6 years. I remember writing an article maybe 3 or 4 years ago, and I think it was called "The Only Major Gold Discovery in Memory Is Gone Goodbye." And the point is that I've now been 15 years in this sector. And in you think about all the oil discoveries they've made everywhere, and all the the agricultural technology they've made that increase yields dramatically. In my whole time in gold and silver, I can remember one gold discovery that was a big deal. It was in about 2005. It was the Fruta del Norte discovery that Aurelian Resources made in Ecuador, maybe in 2005 or 6. And to this date, it's never been developed because the Ecuadorian government wants like a 75% royalty. That's the only one. And it's been transferred. The title's been transferred. They sold it to someone, to Kinross, and then Kinross sold it because that's the only one. And it probably will never be developed because of political issues. And then, like you said, you look at the numbers of discoveries. There are none. I mean, there really haven't been discoveries of any kind since the 80s. And in silver, I mean, you can't, it's harder because, like you said, almost everything is base metal. But I mean, how many? I think there was the Navidad discovery in Argentina maybe 10 or 15 years ago, and I don't even know if that's producing yet. And so, this is what happens when, there's a reason why they call this stuff precious metals. The low-hanging fruit was found a long time ago, and they can't find anything. And now that the costs of the industry have been driven up by inflation, and also you have all these other risks, the environmental risks now, and political risks, and the tax risks, and all these things, it's just very, very hard to get the stuff out of the ground, as opposed to, say, oil, where there's, I don't care, frankly, anyone who says peak oil is just a joke, because there'll always be new technologies that are going to make the production of oil easy to get.
Yeah, and if you make it through all those other risks with the precious metals, then you have one of the biggest risks is management risk, because most of them are either incompetent or they're just, cashing in just with too many expenses on the company for their. It's a friend's hookup, especially in the junior mining sector.
When I was in the oil industry as an analyst from 95 to 2005 or 96 to 2005. And I remember one of the things we wrote about back then, because back then the prices, the whole time I was there until the very end, were like, oil averaged about $20 a barrel and natural gas was like $1.50, $2. We would talk about the treadmill of how hard it was to replace production. Back then, they didn't have the fracking technologies they have now. But more importantly, the aging of the employees of the labor force, because you had years and years and years of a depressed industry, going from the early 90s all the way to the early 80s to the mid 90s, 15 years of depression. And then when it finally got going, there was a couple of big collapses in oil in 98, 99, and then after 9/11, to the point where back then the average employee in the oil field was like 60 years old. And so, I think that's probably moderated somewhat because you've had this boom. The boom was the boom was caused in part because they didn't have enough engineers and geologists to get the oil out of the ground. Now they got plenty of those, but in mining, we really, have been in a bear market for 6 years now. But relative to the cost of the industry, it's like way more than that. Because even at the peaks, the brief peaks back in the late 2000s, the price was being held down, so the profits weren't enough to get people into the industry. And plus, you had all the manipulation of markets that's pushing people into finance and real estate and now technology. To the point where not only do we have not discoveries out there, we don't have capital in the business, and we don't have the technological expertise. Now that we're on the treadmill in precious metals, it's almost impossible it's not possible to replace production, but just to even, discover anything and get anything new out of the ground. So, I think you're talking about a perfect storm in precious metals from a fundamental standpoint, if it was just simply a commodity, and then, of course, from the monetary and manipulation standpoints.
All right, everyone. MilesFranklin.com. Thank you very much for talking to us today, Andy. And again, everybody, go to MilesFranklin.com. Not only can you have physical precious metals delivered to you, you can also have them stored out of country with Brinks. Who better to do it than Brinks? And it's with Miles Franklin. They've been in business for a